You know that feeling that investing is this super complex game, almost designed to be confusing so you have to let someone else handle your money? Well, if you've ever felt that, you are in exactly the right place. Today, we're going to cut through all of that noise. We are going to lay out a concrete, step-by-step plan that you can literally start using tomorrow morning. I'm going to show you exactly how to invest if you're starting from scratch. No confusing theory, just a real, actionable strategy. Okay, let's just dive right in. I want to start with a story. It's a story about your money and how, right now, a silent thief is making it vanish right from under your nose, probably without you even noticing. I want you to think back just a few years ago to about 2019. You've got a €50 note in your pocket. You could walk into a pizzeria and order about 10 delicious margarita pizzas. Simple, right? Okay, now fast forward to today. You walk into that same pizzeria, you have the exact same €50 note, but this time, you walk out with only 6 pizzas. That's 4 fewer than you got before. So what happened? I mean, you didn't eat them. They just sort of vanished? Where did the value that used to buy those 4 extra pizzas actually go? Well, the culprit is this quiet force working in the background of our economy all the time. It's called inflation. You see, as more money gets created around the world, the value of the money that's already in your pocket starts to go down. It's like having a bucket of water with a tiny, invisible hole in the bottom. No matter how much you pour in, it's constantly draining, drop by drop. And that is exactly what's happening to your savings, every single day. And that slow drain can lead to some really painful moments. Let me share a quick story that makes the need for a real financial plan incredibly, well, real. So, in his early 20s, this guy was earning a great salary, actually more than his parents. He felt totally invincible, spending pretty much everything he made. But then he decided to start his own business, and he suddenly realized he had absolutely nothing saved. He had to make a phone call he says he will never, ever forget, asking his own mother for a loan. It was a brutal lesson. Earning money isn't enough if you don't have a plan for it. So here's the crucial takeaway from that. Before you invest a single euro, you have got to get your financial foundations in order. These are non-negotiable. First, you have to attack any high-interest debt, like credit cards. I mean, paying off a card with 18% interest is like getting a guaranteed 18% return on your money. It's a no-brainer. Second, build up an emergency fund. You need enough cash to cover 3 to 6 months of your expenses. This is your financial shield for when life throws a curveball. And third, and this is a big one, only invest money that you are confident you won't need to touch for at least the next 10 years. You have to give your investments time to grow. Okay, so once your foundation is rock solid, it's time to actually invest. But this is where we need to dismantle the biggest and most dangerous myth in the entire world of finance. Most people think that being a successful investor is all about finding that one magic stock. You know, the next Apple, the next Amazon, the one that's going to make them rich. They spend countless hours searching for that hidden gem. But the hard data, the cold facts, tell us that this is pretty much just an illusion. I mean, just look at this. Look at the world's biggest companies over the decades. Back in the 80s, it was all industrial giants like GM. By the year 2000, it was a mix of oil, retail, and some early tech. And today, it's dominated by names like Apple and Microsoft. The entire landscape is constantly shifting. Trying to guess who's going to be on top in 20 years from now is, well, it's next to impossible. And for every success story you hear about, there are literally countless fallen giants. Remember Nokia? They used to dominate the phone market. BlackBerry was essential for every business person. Intel was the absolute king of computer chips. So many of these companies that seemed like a sure thing are now just shadows of what they once were. Betting on individual companies is just incredibly risky. Now consider this number, 90%. Just let that sink in for a second. That's the percentage of professional fund managers. We're talking people who are paid millions to pick stocks for a living, who have failed to do better than the overall market average over the last 20 years. So this brings us to a really logical question, right? If the vast majority of these highly paid experts can't consistently beat the market average, what chance does a regular investor like you or me really have? What's the alternative? The answer is, it's almost laughably simple. Don't try to find the needle in the haystack. Just buy the entire haystack. Instead of betting on one single company, you bet on the growth of the entire economy. And you can do this really easily with something called an ETF, or an exchange-traded fund. Just think of it like a single shopping basket that holds tiny little pieces of hundreds or even thousands of different companies. With one single purchase, you own a slice of the whole market. All right, so let's put all of this together into a clear and powerful plan that you can actually replicate. It's based on a really simple two-part structure that perfectly balances safety and growth. So we're going to divide our portfolio into two parts. The core, which makes up the big majority, about 70%, is your anchor. It's built for steady, long-term growth, and it's designed to weather any storm. The smaller satellite portion, the other 30%, that's where you can take on a little more calculated risk. Maybe you can invest in specific trends or sectors you believe in to potentially boost your returns. Now, the core itself is built on three pillars for maximum diversification. 60% goes into a global stock ETF. This gives you a piece of thousands of companies all over the world. This is your engine for growth. 20% goes into gold, a classic safe haven asset that often holds its value or even rises when stocks are down. And the final 20% goes into bonds. Think of these as loans to governments or big corporations that provide stability and basically act as a brake on your portfolio during a bumpy ride. Let's make this super concrete. Let's say your total investment is 10,000 euros. Your core portfolio would be 7,000 of that. So following our model, you would put 4,200 into the global stock ETF, 1,400 into a gold ETF, and another 1,400 into a bond ETF. That's it. Once a year, you check in, you rebalance if you need to, and you just let it grow. Now, you can have the most perfect, well-researched plan in the entire world, but it can all fall apart because of one single thing. The biggest enemy to your investment success isn't a market crash, and it's not a bad economy. It's your own emotions. This statistic from JP Morgan is honestly one of the most important things you will ever learn about investing. Just let that sink in for a second. 7 of the 10 best days in the market in the last 30 years happened within 2 weeks of the 10 worst days. Think about what that means. If you panic and you sell when things look the absolute scariest, you are almost guaranteed to miss the powerful rebound that always follows. And here's the cost of that panic, illustrated perfectly. If you had stayed fully invested over the last 30 years, you would have seen excellent returns. But if your fear caused you to miss just the 10 best trading days in that entire period, your total return would have been cut by more than half. Just 10 days out of nearly 8,000. So the crucial point here is this. Success in investing isn't about perfectly timing your entries and exits. It's about discipline. It's about creating a plan, contributing to it regularly, and just sticking with it through the good times and the bad. The secret is simply to start and then to never stop. You know, so many of us delay investing. We're always waiting for the perfect moment or for a bigger salary. But the truth is, the perfect moment, it never actually comes. There's a famous saying, the best time to plant a tree was 20 years ago. The second best time is today. We've just laid out a simple, effective plan. So the only question left is, what are you waiting for?